Hello, good evening. Welcome back. Welcome. Thank you very much for your support. Welcome back to ABN AMRO live broadcast class. So anyway, I am Amir. So you guys already know. Thank you so much for your support, and especially you know that we have our election events, and I'm on top now. So thank you very much. And for the people, for the new members, you don't know who I am. So I'm gonna explain about that a little later. But anyway, I have a lot of interesting content that's ready for you. So anyway, let's get things started. All right. Welcome. So anyway, let's look into what I have prepared for you. Well, definitely we gotta have some financial news. It is crazy out there. I mean, it's closer to the election, and it's just a lot of news in the markets been very volatile. So that's why, and of course, we also have the big tag having the earnings report, and they are looking good anyway. So we have some for you. And we have some doing good, and we have some that's not doing so good. Market analysis, stock market, I don't even want to talk about it yet, but crypto market is doing very good. So later on, I'm going to explain about the general manager election event right now is going on, and of course, that whoever supports me will get some benefit out of that. And later on, the last thing we'll go over is how are we going to diversify our investment. So, well, let's stay tuned and let's go. So now let's look into is our financial news. Financial news. Let's look into we have some data came in this few days. We have GDP. So the number came in not as hot as they supposed to be. So let's look into the report and see what they say. So the U.S. economy grew at a slower than expected pace in the third quarter. So anyway, so how slow they were? They were not that bad. I really think this is perfect because this is how the GDP looks. All right. If the GDP is too warm, is growing too fast, too high, nowadays something is called inflation. So then, if they are growing the way harder than they're supposed to be, a lot of them it has to do with the inflation. So then, is it really a growth of the economy, or is just like a jacked up inflation, right? So anyway, let's look at this. The expected growth of the GDP is 3%, but the one that we had is 2.8% from July to September period. So it is harder than expected, but this is how I feel about it. This is actually good. This is good news because we are still, right now, our inflation is still higher than the 2% that the Federal Reserve wants. So we are growing in a rate that is a steady pace. It also means that inflation is in check, and we are growing slower than expected. Means that the inflation is not there. Well, it's always going to be there. We are right now in the inflation rates. Right now, we should be under 3. Our unemployment should be at 4.1%. We are looking there. We are not perfect yet, but we are on our way getting there. And we have other numbers too. We have besides the GDP, we also have the personal consumption expenditures, PCE. The PCE numbers came in nicely too. I have to say it's growing, but not as much either. So now, and the core is looking great too, because the core is the one that they take away the food and also the fuel. That is the one's most volatile items that it's gonna throw us off. So then the measure came in at 2.2% in the third quarter, and then the last quarter is 2.8, so it's doing much better. And then the faster than the projection of 2.1%, while the headline PCE, non-core PCE is at 1.8%. It looks perfect. Right now, this one basically takes care of the Federal Reserve. They have the two mandate. The one mandate is the price stability. and it is getting very stable. I have to say the inflation's basically gone with the numbers we've seen that. And then, so one of the mandate is taken care of. Let's look into the other one. That one is still unstable one, which are the jobs. The second mandate that we have for the Federal Reserve, two mandates, is maximum employment. Is, remember last time I went over Sunday night, I went over the non-farm payroll, and because of the strike all over the country, and also we had the hurricane as well, so it's not looking good. It's not looking good. Like tens of thousands of work is lost because of that. Well, lost in the data. However, is it still there? Yes. I mean, you're talking about the people that get on strike, that they're not getting paycheck, but the unions pay their paycheck too. Remember that. So anyway, and then, but let's look into big numbers. Last time the number was not looking so well with the non-farm payroll, but you know what? It's a brand new week, and we have two of the datas for the employment. We have the JOLTS, and then we have the ADP. So let's look into it. The job openings were lower than expected when it comes to the JOLTS. The job openings and labor turnover survey that says that it is in the all-time low since July 2021. So it's not doing so well. And then they kind of broke down the numbers into it. They show that there's amount of workers left the job. First of all, there's one of the things I know, workers left the job voluntarily to go to the other job is lowered by 107,000 to 3.1 million, suggesting that Americans become less confident just walking out of the job and finding new jobs, which is quite important because usually when people struggle to walk away from the job means that the job market is not doing so well. And also that the job markets out there is not offering they're supposed to offer. So then the offer is not as nice as they would like. So they would just keep the job. So anyway, there's another number too. From that, it has to do with the layoff is also moved up 165,000 to 1.8 million layoffs in the job market. So it's getting. I mean, like, it is not that compared to 1.8 million to 165,000 increase, but however, it is not doing so good with the JOLTS, the job opening numbers. However, the ADP says a different story. So the ADP is the private sector. This survey is a little different from JOLTS and also the non-farm payroll that we get from the government, which most of you already know. This is ADP is more like a preview of the government non-farm payroll Friday. That is the survey from the private sector for over like 400,000 businesses. So anyway, so it actually went up for like 233 jobs last month after rising by an upward revised at 159,000 in September. The ADP national, like that's what it says, the ADP employment report reported today. So there are two problems I'm seeing. Let's go over the report to the Economist poll by Reuters that had forecasted the private employment increase by 114,000 positions. After a previously reported a gain in 143,000 in September. So then the numbers were off and we got more jobs out there. So it is looking better than ever. However, there are two things that I'm looking at I'm not very happy about is that, and I'm glad that because ADP is not the one that everybody, the Federal Reserve or the government is looking into this. This is more like a preview, a guideline for the real government non-farm payroll. However, their numbers been off, and the government non-farm payroll's been off to initial jobless claim. They're fine because it's an exact number. But a lot of times that this number, when they are off, I've seen market crash because of this number. So can we really trust this number? the things that we could do is that we are going to look into the ADP today, and then we are going to look into the non-farm payroll Friday and see if they are in line. If they're in line, then they are real. If they are not, something's off. When you see something's off, you probably want to look into next week and see what's going on. But however, next week is going to be the election. Have you voted yet? Early votings. Yeah. Anyway, it's going like crazy. So then let's look into something that has to be related to more the election than a stock. Let's look into Trump media, the Trump technology and media DJT. I don't know what to say. Let's kind of go over it today. I want to go over it. What's going on today? Today it went down 22.13% just today when the market closed. However, yesterday it went up 14%, and then Monday it went up 21%. I was like, wow, what just happened, right? I mean, all of a sudden, like, the DJT is behaving like a crypto. It looks like it's behaving like the crypto tokens. So, but it is true in a way that because a lot of people calling it a meme stock. Why do we call them a meme stock? We call this, a lot of them a meme stocks. Before Reddit, they called it meme stock. No, I don't think so. Reddit is totally in a different level. But however, we're talking about GameStop, we're talking about the theater. Those are the real meme stock right there, which means that when they are not doing the revenue, but they have the stock price based on not the performance, but the sentiment of the buyers, usually are the retail investors, all right? So now this is exactly the case. This is more like people are calling a meme stock because of the revenue they generate and the market caps of this stock. They are basically not related. They are not, this stock has not generated revenue. It's so small. It's like around a few $1 million of revenue, but they are worth billions of dollars. That doesn't make sense. Then we are giving called a meme stock, right? But however, just like what I talked about last time, that day, with the election and with the poll that is polling towards Donald Trump, they have the direct correlations. I mean, this is the three things now. We have Donald Trump, that the poll, is he going to be the president? And then we have Bitcoin and the cryptocurrency, and then we have his stock, the Trump technology and media. It kind of fluctuates with his poll. So anything polls for him, then it moves. There's a good thing and this is a good part and a bad part here. The thing is, whoever you are for Trump, you have purchased this stock from early on. It's been doing so good just from the last 2 weeks. I mean, we'll calculate today. If we're going to calculate yesterday, the stock been up like 85%, and today it came back down. So like, you're looking at a little bit of a 60% up of like within 2 weeks, and I'm not going to even talk about the whole year. So because he sold some of the ownerships to another company. But anyway, so if we kind of look into that, the market caps and how much that Donald Trump owns, so he has 57% of the media company, and then he is worth $5.4 billion in this one here. So right now they are at $40. Today it's down 22%, 22+%. And I'm strongly against buying this stock because it is behaving. You don't want to invest in this. You want to trade this basically, but you are either going to go long or go short. That will be much better. So but we got crypto that's more consistent. So do you want to invest or you want to trade with this stock? It's up to you, but I would not invest in that unless I'm a supporter, and I'm not telling you if I'm support Trump or not. However, I'm not telling you what to do because I'm not political. Okay, all right. So I'm gonna move on that, but we have to watch out for this stock. The next one we're gonna it has to do with the second company, the second Magnificent Seven that has the report, the earning reports out, and it is looking great. Well, it's the third quarter, the result topped Wall Street estimates as the search giant's advertising revenue climbs. And this is quite significant because the ads is where they make the money. And I'm going to tell you a story about Google. And basically, this company doesn't really have to be afraid of anything if they're going to make money or not, because they are not playing by the rules. I couldn't say that. They are playing by the rules, but they are very innovative, I have to say. Great company. Just think about this. You know, a lot of times that a lot of stocks has to do with everyday life. When is the last time you used a web search is not involving Google, and why is that? Right? So anyway, this question I'll leave it to you to answer. But however, by the end of this report, I am going to let you know why are we still searching using Google as search. Anyway, let's go back into the numbers. The earning report came out it was after hours. It went up 6.5%, and today, when the market closed, it closed 3% higher. So, well, they meet and exceed the expectation, right? Let's look into that. The EPS is $2.12 per shares, so $2.12, and then with the revenue of $88.27 billion, the street estimates of this is $1.84, which is quite a bit more than people expected. And also, well, it's simple. Well, the street expected $86.37 billion of revenue, which was $2 billion more, which is a lot. Even though they make $88 billion, and $2 billion more than expected is still quite a bit. So, and where did those money come from? Mainly, it came from the advertising revenue went up $65.85 billion, which from the last year $59.65 billion here. So that is a big increase in advertising revenue, and also we see a jump in YouTube advertising and also the cloud revenue as well. The YouTube advertising, we are looking at 8.92, so around $9 billion from $8 billion a year before. And we have the cloud service revenue, we are looking at, it's a big jump, $11.35 billion from 8.41, which is a 35% surge. It's crazy. And you know what? I have to tell you about this, and it has to do with Google. What is the strategy and how do they work and make everything just works for them? Well, this is something that I know. Well, don't quote me for it, but this is my understanding of the company. If I said anything wrong that offended anybody, I apologize. But however, do you know how much money that Google pay Apple to make their search, Google search, their default search engine? The answer is like around $1 billion a month. So you're looking at 2021, there was a report that about Google had paid $18 billion a year for Apple's products to put Google search as default. 2022, even better. However, they also provide kickbacks for the Google search. If they use the Google search and then they do the advertising on the search and then they uses that they pay, actually there are users that actually uses that service, the advertising, so then they got a kickback from there too. Google will pay the advertising kickback to the providers. So then it's a perfect circle basically. And now let's think about this. Google was saying that no, and they were talking about the Play Store. We're talking about in-app purchases. They are not a monopoly because, like, well, Apple's Apple. They have their stuff, and then Google is Google. Don't you know Google owns Android? So basically, whatever phone that is not an Apple, that will have to deal with Google. So that's why there was a lot of lawsuits going on. And then, well, they are paying Apple too. Could they work together? Of course they're working together. That is what antitrust is all about, right? So I'm not saying that they're doing wrong. I mean, for all of us, we are all innocent in the court of law until we are proved guilty in court. So that's what it is. And we can always settle it by paying money. So that's exactly what's going on. So Google, Apple, this two company, Google is worth $2 trillion, and then Apple is worth $3.5 trillion. If there's something that you want to invest in, it doesn't really matter. If you have extra money, investment, always invest in the big company, especially they're the Magnificent Seven. So that is Google and their earning report and their little side story. So you can know better about the company, so how powerful Google is. The next one, a little disappointed. I always love the company AMD because this company is the only company that has the encouragement to take on NVIDIA, because AMD is the only company out there wanted to directly compete with NVIDIA. But this company is so much smaller. It's more than 1/10 of NVIDIA, but they are doing it. But however, that they just came up with their third quarter report. All eyes on them because they are one of the considered the tech giant as well, because they still, even though they're small, they're still worth $240 billion. And when it comes to innovation, they are. Whatever NVIDIA has, AMD has it as well. But however, the earnings are great. The earnings fine. It's meeting expectation, but they're lowering the forecast for the fourth quarter. And because of that, the stock came down more than 10%. So let's look into the numbers. The number looks great. For my liking of it, I think it's great. So the chip makers, like the EPS is at 92 cents for the third quarter, and then it just basically is the same. It just meet the projection, and also the revenue is a little more than expected, just a little more, $682 billion, but the expectation is 671. But it still represents a 22% increase year over year. But however, it's a fourth quarter forecast. They're forecasting $7.5 billion plus or minus $300 billion, which disappointed a lot of institutional investors, because their guideline, they're looking at more than that, was $7.55 billion. But it's very close because they have a plus and minus $3 million. So it basically puts them right there. So we have Dr. Su, the CEO of AMD, came out and started talking about what's going on in the third quarter, and she was actually happy with the results. Basically, they have like the record revenue lead by higher sales of both EPYC and also the instant data center production products, and robust demands for the Ryzen PC processor. So they are doing pretty good, I have to say. So the company's data center segment was a standout performer, looking great with the revenue more than doubling year over year to $3.5 billion. And then we have the client segment revenues also showed a strong growth, rising at 29% year over year to $1.9 billion. However, this is what hurt them. Is the gaming segment. Is when the people that use their products to put it into the gaming machines, because you know why? Because it needs to be fast. If you're not going for AMD, who do you go for? That's exactly what's going on. So then there is a segment they need to address. It is $1 billion segment because they are not paying attention to the gamers. It went down 69%. It was over $1 billion, and now year over year, and then there was a sharp decline for only $462 million. If they address this, they are going to be just fine. So there could be a lot of reasons. One of the reasons could be some of the gamers like to play, likes to have the performance. However, their product's too expensive, and there are other products out there from I'm not gonna tell which company is going to be. And there are a lot of reasons too. Dr. Sue, you need to take a look into that. That's AMD. Right now they're $148, came down 10%, 10.62% for exact. Still worth $250 billion, is on its way. The next one I'm going to go over, definitely an industry giant right here. It's always been a giant, so that's why I need to go over it. Anything that moves this stock is going to move the market. So anyway, let's talk about Visa card. We talk about Visa jumped in the fourth quarter profit Tuesday, like yesterday, and then just getting better. People, instead of like, our economy is so uncertain, but you know what? All my friends are going out for vacation. They're going out, they're taking trips, they're dining out. The stock market is better than ever. And we got the crypto market too, and we talk about Forex. We're talking about dollar stronger than ever. We talk about all the mutual funds, the indexes, everything's going great. You know what? Let's start spending. And yes, exactly what it is. And especially when it comes into it's the summertime. I was kind of like, it was the summertime, so then people are out spending money. That's what it is. And it sent the share up 2.5%. After the bell today, it closed higher, 3%. Right now, it's like the stock market, the stock price is at $290, looking great. Payment volume rose 8% in the quarter on a constant dollar basis. And then we have across the board volume, excluding the intra-Europe, we have a gauge of international travel demand surge 13%. So anyway, we have Visa card forecasting the full year, not the full year for 2025. Adjusted net revenue growth is going to be high tens. Basically, it's going to be in the single digits or lower double digits, which means that we are looking at somewhere around 9% to 11%, which is basically in line with the expectation. Kind of in line, lowered a little bit lower by according to the data of the London Stock Exchange Group. So anyway, however, Visa card, when you see Visa, you're the ones, if it's not Visa card or there's MasterCard, and there are other payments like PayPal, do you really use them in a regular basis? I don't think so, right? So there's always going to be issues. And then we have the DOJ last month sued Visa for monopolizing the debit card market. So Visa card, the claim is meritless. Basically, this makes no sense. The lawsuit came after like another major legal setback for Visa when a judge in June rejected a $30 billion in antitrust settlement, wherein Visa and MasterCard had agreed to limit fees they charge merchants. Well, if you have owned a business, you already know Visa, MasterCard, they not only just charge, they have the division that deal with customers, they have the division and deal with merchants. And there is a big percentage that income comes from is the merchants. So they are playing two sides ever since day one, and that's why their money is big money. And remember that too. There were around 3 months ago, there was a sell-off of Visa. We talk about Berkshire Hathaway, we talk about Bank of America. Like everybody is all of a sudden selling off Visa card, there's shares. And the reason why I believe Nancy Pelosi was the ones also selling off Visa as well. The reason why they are overvalued. And that they have to. Something to be not have to worry about for the next 20 years unless a different kind of digital payment comes up. And when digital currencies became mainstream, Visa is not going away. So anyway, if you want to invest long term, unless something else comes in, this is going to be, even though no matter how much the stock price surge, this is something you want to invest in. So that is Visa card. So then anyway, let's look into more of the numbers. They have income rose like $5.32 billion. And then we have the 20, also like 2065 EPS for the 3 months. So expectation is more than expected. That's Visa card. Next one, extremely disappointing. I like this company too because I still remember last time Nvidia and Supermicro was in the convention together. Forgot where it was, but you know what? These two CEOs was hanging out with each other, and then Supermicro was introducing its water-cooled data center system. And I think it is brilliant, and they have some numbers. It's just very promising, but today they are not very promising at all. So their shares went down 35%. Well, it went as hard as over 35%, but like when the market closed was 33%. All right. So basically today, 1/3 of the company's value is gone. And why is it gone? And why am I disappointed? There are a lot of fingers I want to point at, but I never like the institutional short seller, but I think it has something to do with that. So anyway, let's put it this way, and we have Ernst & Young. Ernst & Young is a public accounting firm that's responsible for the finance of the numbers of Supermicro Computer. However, there's a research came out of the Hindenburg's research and saying that their accounting is being manipulated at Supermicro. So they look into it, and then the Ernst and Young, they start talking to the audits over in Supermicro, and then all of a sudden, you know what? They resign. So now Supermicro is still looking for the accountant, basically. And because of that, it has to be a mess with the financial numbers. And Heidenberg's basically got what they wanted. The reason why they're a short seller. If they're a short seller, you came up with a report, what does it mean? It's kind of like I am talking to you about stocks and crypto because I know that which one is going to be perform good in the market. It will go up. Heidenberg's doing the same thing. They're a short seller. They will tell you which one do you want to short. So great job, I have to say, because it works out, right? So anyway, DOJ is looking into this anyway. They haven't do the filing of the annual reports yet. So keep an eye on that. Is it an opportunity? I always think so. I don't see this company is going to go anything more than 1/3 of their worth. So and it's just they are doing great. I think the technologies are doing great. They just need to make sure that for example, the capital expenses, right? The capex or some of the numbers, like how much is it really? Is it that is for the real numbers? Without the real numbers, you're not going to get any kind of results. So keep an eye on that one. Supermicro Computer. Next one, take it easy with this one here. It is VF Corporation. If you don't know what VF Corporation is, it is the owner of North Face. We all know North Face and Vans. North Face rise not doing so good. The sales are not doing so good because not all years that we need the North Face jacket, which is very warm. But Vans, we can ride that all year long, and the stock went up 28%. Well, we have the previous and went down 33%, and we have the one that went up 28% after the report better than expected second quarter. And then also today, it's also provided an improved outlook for the third quarter. The stock today, it went up another 3%. Now the company's worth $8 billion, not bad for a companies like this size. So let's look into the numbers. EPS is at 60 cents for the second quarter, beating estimates of only 38. The estimate is 38, so that's quite a bit. And then we have the revenue 2.76, actually just a little more than the estimates of $2.73 billion. Although that was down 6% year over year, so the CEO is saying that the result of the quarter met their expectation and also reflect the sequential and the broad base of improving in year over year trends. At the same time, though, this is what we need to say, this is what we need to do, and the street was focusing on this. One sentence make a big difference is they made further progress on their 4 reinvented priorities and also are on track to reach their previously set it 300 million savings target by the end of the fiscal year of 25. So the margin went up 120 basis points, not that much, but the thing is, look into the big number. Right now they are at the gross margins at 52.2%. However, the operation margin decreases too at 9.9%. So everything is looking okay. Is much better than expected in a way. So looking ahead, that they have to provide a guidance for the third quarter, projecting $2.7 billion to 2.75. So you are looking at 2.72. It represented 1% of the 3% year to 3% year over year, below the estimates, but we will see what's up. We have Vance. Coinbase, we have to look into this because this has to do with this, something that is my pick, is always going to be my pick. The stock price didn't do so well today, but this is going to change tomorrow. The market closed 3.61%, and right now the company is worth $52 billion. It is one of the most popular crypto wallet or maybe crypto trading platform right now. However, the story is not for Coinbase. It has to do with the tracker. They have spotted a 3,000. They don't have to spot it. It just happens that because someone deposited 3,000 Bitcoin into Coinbase. And then once it's deposited, it was like, put it into one account and was split it into another account. So we have 3,000 extra Bitcoin is worth $205 billion depositing into Coinbase. Someone purchased this. Someone deposited over $200 billion and trusted in Coinbase. So then what does it mean? There is a lot of movement going on in not just the crypto market or the crypto wallet. Is about Bitcoin. It's about cryptocurrency itself. It's just that people are buying out, and I have more news about Bitcoin later when it comes to the crypto market. Don't get me wrong, all right? So hang in there. Well, a lot has to do with our election. It's just there are too many news is for the cryptocurrency, especially Bitcoin. So we need to. Well, it's going to be insane. Next week we have the election, and we want to see the results. Last one I want to go over is something that is a little easier. We have Caesars Entertainment. Is surprisingly the third quarter is down because most of the other ones, the gaming industry, is up. So we have, and it couldn't be down because especially it's a summertime. People go on vacation, especially. You probably went to Vegas at least once, right? I was there a few times. I love gambling. Well, that's the reason why I'm in this industry, right? But anyway, enough of that. So anyway, instead of everybody's making a profit, they are making a loss of four. The EPS is 4 cents. It's under 4 cents. Instead, the expectation is 12 cents ahead, making money, profit. Instead, they're making a loss. So why do they make a loss? Well, Caesars Entertainment is not just Caesars Palace. They have a lot of properties out there. Basically, ever since the merger, they were Harris Entertainment. And you look at Harris, there are a lot of casinos all over the United States, right? We have just in Vegas, they have Harris Entertainment, they have Harris, they have Flamingo, they have Bally's, they have Paris, and now they have Caesar's Palace. And back then they have Rio. So then they are quite a bit, and that's just Vegas, right? So anyway, they are making a loss, and I don't care who they are. If they're gonna make a loss, that is not something that I like. And if you just like last time, I went over to the casino floor over in Caesar's Palace. It was the same as 20 years ago. So not very happy about that. And then right now they are just the bargain. Caesar Palace is like the bargain luxury, and the other one is just bargain. All right, those are the places for people that look for a bargain, and then they are using price to fight for the market shares, and that's not good business. Anyway, today share down 8.2%. They better shape up. So that's Caesar's Palace, Caesars Entertainment. So now let's look into the stock and the crypto market. Let's do some analysis, and we did go over already that we have all three major stock indexes were down. However, we saw that Google's looking better it's looking pretty good. However, everything's looking quite good too, but not all the stocks out there. So that's why all the indexes were down, even though Nasdaq kind of hit the all-time high today in the session. ADP jobs, the private sector jobs number, we went over to 33. Is much more than expected, and then the GDP growth lower than the expectation, 2.8. Supposed expected to be 2.9. So it's very close anyway. I see it as it is helping the market. And then what about our rate cuts in November? We still have to see. Right now, are we going to even have one? Are we going to have 25 basis points, 50 basis points? Everything is still on the table. So that is the stock market. It's been mixed. You never know when it's go up or down, even though we got some tech giants, we got some giants in them, in the mix, and then they are doing good. The stock was doing good too, but you don't see a lot of movement anyway. The next one, however, BTC right now, BTC is over at or close to, it's like around 72,000. It broke 70,000 and then rose below 74. It's crazy. And there is very interesting because it has been over, it was at 65 and went to 67, 68. And then it just struggling to break through the 70 and came right back down to 65. And I kept saying that, 68, 67, 68 was a support level, but it wasn't really. The reason why it just keep going back down to 65, and they didn't stay on top of 67 for long enough to be the new support level. But however, right now they are out there. The interesting thing, they probably preset it. There was a large liquidity cluster, a short position that was placed between 69 and 70, which means that they have a short order. They have to execute when it hits that 65 to 70. They are selling it. 88 million of the positions were liquidated after the BTC broke the 70,000 mark. So that is kind of insane. But anyway. But still, people are all for the BTC right now because of the prediction that Donald Trump is going to win. A lot of predictions say he's going to win, but depends on which one. Fox News, right? But the other media, they're all for Kamala. So anyway, never know. In addition, we are at halving cycle of BTC with usually within 6 months to 18 months after the halving, that BTC will surge crazily, totally crazy. So anyway, we're still looking for that big jump. All right. So everything is for BTC right now. If you miss that wave, you might have to wait for it. But there's still a long way to go. So that is the crypto market. Let's look into something else. We have the general manager election for the US branch. So we talked about this bit last time that you are getting the benefits of it. If for some of the new members just came into the broadcast, I'm gonna go over it one more time with you very briefly. This is what we're going to do because we just formed a strategic alliance with CoinGo Exchange, which you are getting. Sorry about that. I'm just going to readjust that. We have a conditional agreement with them. So the conditional agreement is basically like this. By the end of this year, if we, ABN AMRO, can bring additional customers to CoinGo Exchange, 80,000 additional members plus a $5 billion worth of assets into the exchange, they are going to grant us ABN AMRO 49% of their ownership. So then we are working really hard for it. So then this is going to benefit our members. However, our company that believes that if for us to achieve this, and this is a big thing too, because we have been trying to break into the US market, and this is one of our big break here, that we can partners with CoinGo Exchange, so then we can step our foot in the US market firmly. So anyway, our company believes that we got to have a leader, have a general manager is going to take the lead in the US region. We do ABN AMRO right now. We have 3 divisions. We have 3 divisions right now. That is, we all have our leaders, our managers, or the head of the division. So then anyway, that we need to have one to reorganize the whole company. So I am one of the candidates. So that's the reason why I'm asking you guys for help, that if you can support me and then vote for me, because this is going to be one thing, is getting enough votes. That's one of the criteria to become the general manager of the US for the US region. And then the second requirement, to gain as much manageable assets as possible from our members. So this is what we do here. So the first thing we do, thank you very much. Thank you for supporting us. That is one of my strategy too, because I want you to help me to go on to the CoinGo Exchange, the apps, the software, go in there, or they have their online investing page. So then you go on there, log in, and then hit the support buttons for me every day to vote for me. And in exchange for that, by supporting me, I am going to grant you a interest-free trading funds. And then I don't know how much is it gonna be. It's going to be from $500 to $5,000. You never know. Well, you have to click on the support on me, and then you get into your account, and you will have $500 to $5,000. This is a trade credit that you can use till November 4th. And then November 4th, this credit, whatever we gave you, maybe we give you $5,000, we'll take the 5,000 credit away from you. So whichever, in this period of time, till November 4th, if you make a profit on your investment or your trade with this credit, with this trading funds, the profit is yours. November 4th, you can take the money out, you can reinvest it, you can do anything you want to with it. You might think that, but what if I lost? Well, if you lose this money, it doesn't matter. It's on me. All right, is something that I want to show you my appreciation that for helping me out. However, and you are not, there's a very slim chance you're gonna lose any money, because as soon as you get this trading funds, and then you start trading, right? You don't have to trade on your own, because you're not on your own. You have us. We are going to assign you with a private trader. So basically what you have to do, your trader will tell you what to trade, when to trade, how you're going to trade every day, all the way till November 4th, and let you know how to experience how to trade crypto. So you are perfectly safe. So anyway, if you have not registered yet, go talk to my assistant, text, you can DM my assistant and say that you wanted an account, but don't forget to hit your support, or else you're not going to get that credit, that trading funds, interest-free trading funds out there. Is free money for you, and we have people teaching you what to do. So thank you again for your support, and let's look into the last part of that. It has to do with our diversified investment. We kept talking about diversifying our investment, but how? Yes, I'm gonna invest in stock. I'm going to diversify by investment. I'm going to invest some in commodities. I'm going to invest in some into some tech stocks, bank stocks, and like that. Yeah, is that called diversified? Not quite. But we are going to look into the big picture today, so I'm going to see the advantage and disadvantages, and we are going to talk about diversifying our investment, the advantage and the disadvantages in these 5 different fields. We have stock, we have index funds, and we have foreign exchange, the FX, crypto, and also gold. All right, so let's get things started with how that. Why do we want? Well, first of all, we already know why we want to diversify. But what kind of products that we have that we can diversify in? We just talk about stocks. And stocks is usually the preferred way to diversify. And the reason why is easy. It's very easy. It has high returns on the investment, and we have to focus on the investment. The reason why it's investments usually for long term. In long term, right, it does have a high returns, and then strong operability, and also the strong speculations. So then that's the advantage, all right? And it's the easy access for stocks, because everybody start with they start with having stocks. However, this is the disadvantage. Well, it's like other financial product. It comes with risk. Income is not stable. There's always going to be ups and downs, and is highly regulated. And that's what it is. It is regulated by the SEC, and it's also regulated by other government agencies. IRS was going to look into your tax return on that one, on your investment, because of the capital investment that you have your capital gains on your stocks, then you have to pay tax on that one too, unless you're just not ready to sell it yet. Well, sometimes I believe interest. I believe in that. You get taxed on some things. It means that you make money. I'll be willing to pay that, but it's highly regulated. Something I don't think stocks is that great anymore, but I still have most of my investment in stocks. The second one, it has to do with index funds. What is index funds anyway? You're looking at index funds. We hear a lot about that. It has to do with like mutual funds, ETFs. Those are called index funds too. What it is just a pool of investment that is passively aimed to replicate the returns on a market index. So anyway, easy to invest, advantage, make average return, widely diversified investment, low cost, high transparency, low tax, and also easy to understand and operate. And usually people do it for you. However, it is lack of active management, inability to outperform the market, usually extremely volatile when it comes to risk, limit returns in short period of time. Takes too long. So that's index funds. And now we have FX, foreign exchange. Yeah, I mean that we can invest in foreign exchange, but it's low cost. It's easy, high frequency. You can buy whatever foreign currency if you want to. There's no central exchange. There's no central exchange. Leverage large amount of capital from small amount. But anyway, disadvantage: high volatility. Depends on what currency you invest in. Complex pricing process because you need to keep going. If you want to keep making money, you have to keep seeing the relationship between a lot of different currencies, and then the lack of transparency as well. And usually, it's just too much work for too little gain. So that's why what I usually like to focus on is stocks and cryptocurrencies. We all know cryptocurrencies right now is the hottest right now. And if Donald Trump became a president again, then he is going to start promoting crypto on his own. So I have no problem with that. So advantage: fraud protection, identity theft prevention, immediacy, and low cost, and the security as well. They are as secure. However, we have the disadvantage of investors often feel a lack of knowledge of that. Not a lot of people knows how to trade crypto, and it's uneasy about the wide range of applications, lack of sense of investment security, and there are just so many of them out there. You just don't know what to pick. Stock market is the same way too, but it's the volatility that how are you going to manage the volatility in the crypto market? So the last one, gold. I can't just say gold. It's just let's look into the advantages of that. We have the spot gold has currencies attributes, and that's an advantage and can be correct. Cash according to the real-time market conditions. It can also be used as an international payment tool, and the market contributes are open to transparency. However, it needs to be self-collected and self-supported for safekeeping. So you have to buy a piece of gold, and there is no relevant purchases clause. It needs to be checked, and relative unrelated fees about when it is sold, and this fee is actually quite a bit. And then there is no interest incomes. Well, there are commodity exchanges out there that you don't have to keep your gold or silver or copper. You can just do it like a stock and the crypto market. However, it's always nice to buy gold too, right? So that's the advantage and disadvantage of the how to diversify your investment. So this is all for tonight. Thank you very much for your support, and I really need your support right now. And I will talk to you guys very soon. Have a good night.